All right, well, welcome to Entrepreneurship Introduction 101. For those of you that are online, those of you that are in the room, we're going to go through 4 weeks of great training and discussing the importance of entrepreneurship and how to become a successful entrepreneur. So what I'm going to ask you right away, make sure you have a notepad with you and you're taking notes throughout the course. We're also recording this session to make sure that if you don't get all the information, don't worry about it. I will send you the link. I will send you a copy of tonight's presentation. But before I go any further, I want to introduce Mr. Matt Wells. He has been such an asset to us from the Sbdc. His work, his commitment has been just phenomenal. So let's put our hands together, though you're online, for Mr. Matt Wells.
Hi, everyone. Thanks for being here. I'm the regional director of the Sbdc here at FDU. We cover Morris, Warren, Sussex, and now Hunterdon County. So there's some in the audience, you guys here today, I assume are from the region. Everybody else, we have some people from out of state, but pretty much from across all of New Jersey. So, and if you want to hit the next slide for me. All right, so if you don't know who the Sbdc is, we've actually been in New Jersey for 45 years. We were the pilot project from Congress to start the Sbdc. So we've been in New Jersey for a very long time. We're one of 11 centers across the state. We basically cover the Northwest Center, pretty much the whole corner up here. And there's an Sbdc in every state and every US territory. So if you need assistance and you're not within our region, or if you're out of state, please reach out to your local Sbdc because they're there to help you start and grow and sustain your business. And we're funded directly through the SBA. Every Sbdc has state partnerships. We're lucky to work with NJBAC here, and Rutgers is their state host institution. And then we'll go to the next slide. And most of the time you'll find an Sbdc at either a local community college, university, even sometimes chambers of commerce, lending institutions. So all the ones in New Jersey were connected to some college or university, usually on campus or right off campus as well. So we work down in Chatham, which is, I don't know, 5-minute drive from FDU campus in Florham. But you can find SbdCs everywhere. And usually you'll find them connected to a business school or college or university. And we put on a series of events like this. This is funded directly through the CARES dollars, the CARES Act. They came out about, what, 2.5 years ago. So this is the last remaining little bit that we have at our center to host this for 4 sessions and have Ed prepare this and develop this for everybody here in the room and everybody online too. So without further ado, I'd love to turn it over to Ed to take us through the 4 weeks here.
All right, well, thank you, Matt. Thank you for that. And because of his efforts and our relationship and the connection, and Craig Schaufler, which is the Vice President of the Economic Development Corporation, and Megan Hunter from the Chamber of Commerce, we are here today to help you succeed. So for those that are in the room, what I would tell you, start taking notes, make sure that you take as much information as possible. Today's session, we're basically going to cover personal finances, because many people want to jump into business and you're thinking about the end result. And what I tell people is you got to make sure that your personal finances are in order. So we're going to cover a few things that are very important. I put on the chat for you, for those that are online, for those that are here, I'm going to send copies of the SBA manual. I'm going to send some copies of business plans that the SBA gives as an examples. I'm going to email those to you. But if you need anything or you need to contact me, the best way to do it is by email. So make sure you go to Ramirez@morriscountyedc.org. If you go to the chat, I put that on top of the chat for those of you that are online so that you're able to communicate with me. Shoot me an email, let me know. I need copies. I need a copy of tonight's session. I need copies of the forms. I need copies of the books. We're going to send you everything that you need, so you don't have to worry. You don't have to go online. You don't have to get any forms. I'm going to supply you with the budget forms, which will be part of your homework for next week. Now, you got to make sure that next week you're ready to go, because the first session or the first part of our program will be going through the homework. And part of that will be preparing a personal budget. So we're going to give you A to Z today. I'm going to give you instruction, but then we're going to give you some homework. And tomorrow, I'm going to send you all the forms that you need by way of email. So this is me. I'm Dr. Ed Ramirez. I hold a doctorate degree in business administration. I work with the Morris County Economic Development Corporation. For those of you that wanted to come in person, some of you wrote me some emails that today some things got in the way, but you needed the address. The address is 325 Columbia Turnpike, Suite 101, right here in Florham Park. My cell phone, if you're gonna call me on my cell phone, the best thing to do is to text me. If you text me and you tell me that you're part of this class, I will respond. If you just call me, I get 1,000 calls a day. I prefer that you text me and let me know I'm part of your entrepreneurship class, and that's at 973-207-8544. Our objective is to help you to answer your questions, to make sure that you have all that you need and that I answer all your questions. So that's my information on the screen. SBDC Entrepreneurship Program, making your ideas grow. What I would tell you, the first thing you need to do is write down your idea. What is your idea for business? And then the next question you need to ask yourself, what problem does it solve? You do not go into business unless there's a problem that you feel you can solve that problem, and you can solve that problem better than anybody else. So it's very important that you can go and have a seat, sign in, and you can have a seat right over there. All right, so it's very important, your idea. So I tell people there's needs all around us. That's how come there's inventions. That's why there's creation. That's why there's so many things that people come up with. What's the problem around you that you feel you can solve it better than anybody else? And if you get that, then you're ready to start on your mission to make that happen. I tell people in this class this: if you know the why, why do you want to do this business? Then here at the SBDC and the Morris County Economic Development Corporation, we will help you with the how. But the why comes from you. The how, we will try to help you how to make it happen. So these two questions are super important. Course structure. Start and end on time. I will start at 6 o'clock on the dot. We will go to about 8 o'clock. I will, about 15 minutes to 8, I will stop the session for Q&A. I want you to ask questions. I want to be able to answer those questions for those in the class as well as those that are online. I ask you to pose your questions on the chat. Put your questions, because I will, if I don't get to them, I will send you an email and I will answer those questions for you. No question is silly. Ask the question. Whatever you have in your mind, that's why we're doing these courses, so that you can ask the question. So do it on the chat. Those that are here, of course, you'll be able to ask me during the Q&A session. Plan to be early at every session, because there's no makeups. There's 4 weeks. We're going to go 4 Tuesdays. So we're going to go 3 Tuesdays in a row. Then we're going to hit the Tuesday, which is the July 4 weekend. And you guys are not going to want to see me. You're probably going to want to see down the shore, which is okay. But then the following week, we'll finish the 4th week. So there's going to be 3 in a row, 1 in between because of the July 4, and then we go into the final 4th session. Weekly follow-up with the instructor. I'm your instructor. Send me your questions. I will help you. I will send you where you can get information. I will send you to the different websites that the state of New Jersey provides in order for you to register your business, operate your business. We will give you resources which are available to us in order for you to make the connections that you need to make in order for you to succeed. Complete all your assignments. I'm going to send you by tomorrow. You're going to get all these forms so that you will have enough time. You'll have about a week to do your assignments. You will have everything that you need in order to do the assignments that we are going to require at the end of the session tonight. And please, if you're in the room, put yourselves on vibrate. If you're online, I've already muted everybody, but just in case I forget, please mute yourself. I know that you love your kids, you love your dog. We don't want to hear that coming through the system. So what we're asking you is, please put your phones on vibrate. We will cover today. These are the 6 areas that are super important. If you want to write these down, these are essential to your success. Number 1, personal readiness. The role of your personal finances, your household budget, personal financial statement, personal credit, credit report, credit score. Some of you have asked me the question already. Dr. Ramirez, if you have an LLC or if you have an Inc., a corporation, can I just give the federal ID number to get a loan and not be responsible personally? Well, if the company is new, and most instances, most bankers will require some type of personal collateral. So your personal credit is going to be very important when you're opening a new business. So I tell people personal credit, initially, you're going to be the one that's probably going to be signing leases, and everybody wants something called collateral. Who's on the hook? If you're a new business, new LLC, your personal credit is going to play a role, and it's also going to play a role when you go for different types of loans, because they're going to want to know that you're credible, that you're trustworthy. So that's why we're going through this, because this is super, super important. Your mission, who are you? A lot of people mistaken vision with mission. Vision is where you expect to be. Vision is the final picture, is the portrait. Vision is, I see myself building a 5,000 square foot house, and it's going to look like this. It's going to have 2 decks. It's going to have 4 bedrooms. It's going to have 3 bathrooms. It's going to have, that's the vision. The mission is how you make that vision a reality. So the mission is the roadway to making your vision a reality. Your mission is who you are. Who are you? What inspires you? What motivates you? What gets you up in the morning to say, I am going to do this. I am going to solve this problem. I'm going to do it better than anybody else, and I'm going to make sure that I am successful. So you got to have a vision. Where do you see yourself a year from now, 2 years from now? I tell people, have a short vision, have a long-term vision. Where do you see yourself next month? Sometimes we sit around idle and we don't realize that time is going to pass us by. I remember when I was 18, boy, that was a long time ago. And I remember when I was 18, I wanted to be 21, and boy, has that passed a long time ago. So one thing is a fact, time is going to pass us. Whether you jump on the wagon or not, time is going to continue. How many of us still say today, man, I wish I would have finished school, but you said, I'll do it next year, and 20 years later, that next year has never come. So what I would tell you is, you got to go today. If you really want to succeed in business, you got to go from I should to I will. Because I should is an excuse. And I tell people, an excuse is usually a lie with an explanation. I should have, I could have, I might have, but we never get on track to make it happen. So you got to get to that place right now, I will. And part of it is being in this class. Something motivated you, you showed up, you're here, so that I will is already in momentum. We're going to make this thing happen. So I want you to really answer that, and only you can answer that. Prepare. 5 steps to the full assessments of starting a business. In order to start a business, it starts with the personal finances, and that's what we're going to cover a lot of that today, and why is it important, and credit scores, and we're going to talk a little bit, and we hope for those that are online, you've been able to introduce yourself on the chat. Let me know where you're coming from. Even let me know what your business idea is, because then when I look at that chat, I'm able to come back and give you feedback. And for those in the room, write that down somewhere. What is your idea? So that then I can help you and see how I can provide feedback to help your idea become a reality. So step 1 is personal finances. Number 2 is the idea. So the idea, you got to really, and we're going to cover this in detail, but the idea, you have to see, first of all, is it marketable? Is the idea a good idea? Will this idea be effective in what I want to accomplish? So that's important. There's a few questions we're going to ask there. The market. You know, when I talk to entrepreneurs, and especially those that are probably online, and I ask them, well, what's your target market? Everybody. Who are you going to serve? Everybody. Well, that's not true. That's not true. First of all, you don't have the capacity to serve everybody. So I tell people, make sure that you target your market. Are you going for children? Are you going for adults? Are you going for entertainment? Are you going for design? Some people say construction. What type of construction? Do you do steps? Do you do walls? Well, some guys say I do everything. Well, are you good at everything? I tell people, when you focus on your market, then you are more successful. The chances of success are greater. So we're going to be discussing your market. We're going to be discussing organization. And, we're going to recommend whichever way you organize, whether it's a sole proprietorship, LLC, corporation, S Corp, and we're going to give you some ideas, but we're also going to recommend that you're able to connect with, lawyers and let lawyers do that, and let accountants do the accountant part, and let the lawyers give you advice on what type of structure will work. We can give you advice, but at no time will we give you any legal advice, because that's not the objective of this class. This class is to give you general information, but we also recommend that after you get all this information, go and talk to the professionals. If it's the structure of your organization, talk to a lawyer. If it's the finances, talk to an accountant. And then, of course, financial. So financial, you might say, well, we're talking about personal financial. Why on step 5, we're talking about financials? This is when the business is ready to run. And what is it going to take to run your business? The startup is usually very challenging for a business, because they don't take into account everything that they have to take into account in order to start up a business. So from that, when we get down there, you will have already visualized your business finances, your ideal market organization. And then what we do with this course is we start preparing you to prepare a business plan. And then eventually we're going to have a competition that you guys are going to be able to participate, and you will be able to present your business plan to different professionals, different bankers that would actually critique your business plan and help you. So in the future, you already started. When we get these experts to critique your plan, they're going to tell you, tweak this, tweak that. You're already ready. The day that you have to go for a business loan, you will have a business plan that's already at least started. Awesome. Any questions in the room? Are we good so far? Good. All right, good. So here it says a 10-minute break, but I know that we just started. So I want to say, for those in the classroom, there's some water back there. Also, for those in the classroom, if you need to get a bathroom break, you can go through this door, make a left, go out that door, and the bathrooms are right there as soon as you open the door. So if you need a break, let's take a 5-minute break. We don't need 10 minutes. For those online, let's take a 5-minute break. We'll be right back so that those in the room can take a quick break. Any questions so far? We're good. So far, so good. All right. All right. I'll be right back. I'm going to check the systems, and I'll be right back in 5. Everything good?
Everything good. I'm trafficking over here. Especially 80. Actually coming up this way too, 24, to go to this street. It's busy too. Where are you from? From Hackensack. You live on here? Huh? You live on here? I live in Harrisburg Heights, but I work in Hackensack. I live in okay. Keep busy? Yeah. Yeah.
So I'm still working full time, right?
Yeah. Yeah, it's one thing is you gotta do both.
What kind of business? You got the cleaning business, right? What business are you looking to do?
I want to do cleaning business, but more focused on commercial tile cleaning, tile and grout, carpet cleaning. I know actually cleaning. I know what types of cleaning.
That's awesome.
Like Serpro, which I am certified to do that as well. Remediation, mold, water. So I have a lot of cleaning experience, and I used to have my own cleaning business.
Wow, that's good.
Yeah, all right.
You ready to jump back in?
Yeah, I'm ready.
Good.
Just some things that I need help with, like the whole, what we're talking about, like the finance, and like to actually figure out a business plan and like really break it down is what I need help with,
Good.
you know?
Well, in this class, take a lot of notes because we're gonna do that. What business are you looking at?
I'm a realtor, but I would like to like really legitimize what I'm doing.
Oh, good. Good.
Yeah.
So real estate, commercial or just residential?
It's residential. I've done some commercial like rentals and stuff. That's about it, yeah.
Good. What business are you looking at?
Oh, I actually own a business. I'm a hairstylist, so I have my own salon. So that's what I'm
Looking to expand that out?
Yeah.
That's awesome. Hey. All right. All right, so I know some of you are writing in the chats. We got 55 of you that have written, and you're getting motivated, you're getting inspired, and that's what it's all about. No, and I'm not Tony Robbins, I'm Ed Ramirez. All right, step one, your personal finances. Let's go through that. And I'm gonna be sending you guys a different case study so that you start seeing even a couple that starts to discuss. They're gonna discuss, they wanna open a new business. And I'm gonna send you a case study by email. You'll get that by tomorrow. That shows, now they start planning. And one of the first things that I tell a person when you're planning is your household budget. For example, you go to open a new business and you're like, man, I want to get my business open, but you're working for someone. First question I will ask you is, how much do you make from where you're working right now? So let's say you tell me, well, right now I'm making 60,000 a year, 80,000 a year, whatever that number is. If you're going to open your own business, there's the likelihood that that revenue is not going to be coming in. So if you're going to quit that job, you have to figure out right away, how am I going to support myself if that money's not coming in? And I think that a lot of business owners commit the mistake that they jump. And it's good to have faith and it's good to jump by faith, but you got to also plan, because next month the rent is still due, the mortgage is still due, the bills are still due. I tell most business owners if they can, to start while they still have their full-time job, maybe work it as a second job. You start as a hobby sometimes, test the market, see if it works, see if it's going to support you. And then at that time you start making decisions if you're going to let go of your secure income. That is very important, because you can have a great idea, but sometimes it takes time for that idea to take off. So the first thing you got to do is a household budget. Some people ask, what do I need to do in a household budget? The first thing you got to start thinking about is, what are your fixed monthly expenses? And I'm going to give you a form that I'm going to send that you're going to fill out. It's going to be part of your homework. But let me talk about some of the stuff. What's all the revenue coming into your house? And you got to tally that by 52 weeks or by 12. And you got to say, okay, this is exactly how much money is coming in. And then, of course, you subtract taxes, because that's first. Uncle Sam is going to want his money. So you got to make sure you subtract taxes. One thing that I want to bring up front is, when you are a sole proprietor and you go to work for yourself, you're going to do something most likely called a Schedule C in your taxes. And Social Security tax by itself will be 15.3%. Right now, when you work for someone, your employer pays half of that. When you go self-employed, you got to pay the full 15.3%. So that becomes very important for you to tally that up. So that means if at the end you believe you're going to have a net to support yourself of $60,000, right off the get-go, take that $60,000 and multiply it by 0.153%. Because at the end of the year, no matter how many deductions you have, no matter how many things you can deduct, if you took $60,000 from the business for personal expenses, you're going to pay that 0.153%. That's going to cover Social Security and it's going to cover Medicare. And what people, most entrepreneurs don't calculate that into their budget because they're used that their employer pays half of that now. But when you're self-employed, you're gonna have to pay the full 15.3%, and then federal tax and then state tax. So I tell people right off the get-go, keep at least anywhere from 30 to 35% aside for taxes, because that you're gonna have to pay no matter what. What is your rent? What is your mortgage? You gotta make sure that you calculate your mortgage, including taxes and insurance. That is vital if you own a house. If you're renting, what is that cost per year? That's super necessary. You can't do without that. Same thing as your auto insurance or note payment if you're paying a car payment. Those are things that you can't do without. Rain or storm or good or bad. Those are things that are due. You can do without Netflix. You might want to deduct that. But anything else, health insurance. If you go to work on your own, who's going to provide your health insurance? If you go to the market, will they cover it for you, or will you have to make certain payments every single month? So these are the things that I ask new entrepreneurs to start really thinking about, because these are fixed expenses. I've had small business owners have jumped just on faith and have never taken into consideration these different budget areas. And next thing you know is they're having issues at home. Remember, your wife will support you or your husband will support you, but when things start getting tight, everything is tight in the house. So I tell people, everybody's gung-ho about a new business, but do a budget. And don't do a light budget. I prefer you overestimate than you underestimate, so that you're safe, so that hey, even if I gotta leave my job, I can support myself with my wife's income. We can still support the house, or with my husband's income. If it's the wife that's gonna open a business, I know that at least with one income, we can support all the basics. So then, we can struggle for a little bit if we needed to. Also how much is in your savings. So you should have a budget even now before you consider going into your own business. How much are you throwing into savings every week? I tell most couples, if you stop buying Starbucks, if you stop Dunkin' Donuts, and you put $100 a week, just $100, at the end of the year, you'll have $5,200 in the bank. Where most people say that I don't have a penny. Well, I'm sure if you calculate between what you spend in Starbucks and what you spend in McDonald's and what you spend in Burger King, it's probably more than $100. So even at a conservative $100, you can save $5,200. So we're going to give you, to put your insurances, put different repairs. When you're doing a budget, one of the things that I tell people when you're doing your household budget, it's so important also to put, if you drive a hoopty, and for those of you that don't know what a hoopty is a car that's not the most modern car, and it's past warranty. It seems like the dealer gives you 5-year warranty, and at 5 years, 1 month, something goes wrong with the car when it's not covered. I tell couples, when you're doing your household budget, put some money in there for repairs, because you might need some tires, or you might need a battery, or you might need something. So what is that going to cost you? Different services, like the women, your nails. What do your nails cost every month? For the male, your haircuts, your this, your that, or some of you don't have to worry about the haircut, so that's good. But there's some expenses there. So we're going to give you this form, and basically what I want you to do is look through every expense possible and come up with a number, whatever that number is. Whether it's 80,000, 60,000, 100,000, 120, because that's your basic. This is what I need to survive. Even if everything breaks loose tomorrow, this is what I need just to not become homeless. Then from that, we start working, because then from that, we start calculating, can this business, with your wife's income or your husband's income, can this business provide the bare minimum that we need just to survive? And when I've done the analysis with some people, it's come out that, some businesses will not produce that. Some businesses, it's better to consider it a hobby and a supplement to your current income. But some businesses will never be a business that will be 100% able to support you. So it's very important to debate that. Those commercials that you see on TV, I'm an entrepreneur, and they're at the shore and they're swimming, and you see the big hotels and stuff. that's just marketing and advertisement. The average business owner has to work real hard. And the other thing that I will bring as you're budgeting, the other thing that I will bring, if you want to become an entrepreneur and you intend to only work 40 hours a week, work for somebody. Work for somebody, because the average entrepreneur will not just work 40 hours a week. It's more like 60, 70, 80 hours. Because when everybody goes home, the entrepreneur has to keep working to make sure that other people get food on their table. And then he's got to make sure that he's also able to support his family and pay his vendors and pay his utilities and pay the business expenses. So the entrepreneur is a lot spiritually. I tell people, you know, you got to check yourself also spiritually, mentally, physically, emotionally. All four. You should write those down right now. Especially when you're going to go into your own business, you got to calculate, you have to analyze, how's my spirit, man? Am I spiritually? Am I motivated? Am I happy? Am I good? You know, so your spirit is going to become very important. Emotional, how are your emotions? I'll tell you right now, if you're emotional, don't go into your own business, because emotions are always at work. And no matter what, when you're an entrepreneur, you're dealing with customers, and customers are always right. So you have to smile. Even when it gets intense, you have to smile, you have to be graceful, and you have to practice customer service. So again, there's spiritual, there's mental, there's emotional, and of course, physical. It is a physical drain. I've been doing it for many years myself. You know, I work here, but I also have a few different businesses that I run. So it's a constant running from one to the other, one to the other, one to the other. And you're constantly, you got to be in shape. So whether it's running, exercising, the gym, do something other than sitting down on a chair and hoping business is going to come in. You know, my wife told me this morning, she goes, you know what, hon, we're going walking. You know, because my boss, which is in the back, Craig, he walks every morning, and my wife heard that he walks, I don't know how many miles, and she said, if your boss could walk, you and I are going to start walking in the morning. So that's why some of you saw my video this morning, walking with my wife, because if my boss is walking, I got to walk, because we got to stay in house. And him and I are working like crazy. We were at a clay shoot today, shooting weapons, a little bit sore, but we're here. Why? You need good physical strength.
Yeah.
So I tell you, you know, make sure that your spiritual, mental, emotional, and physical, those four are in good shape, because running a business, man, it is promising, it is rewarding, it is exciting. But if one of those areas start to lack, something is going to fall through the cracks. So make sure you're healthy. If you look at the screen, it says personal financial statements, the balance sheet. Why is this important? The balance sheet is that part that every accountant wants to look at. And what they want to see is assets equals liabilities plus equity. When you go, so some people might say as simple as, what's an asset? An asset is, let's say, a house. And you know that many people want to buy a house, but what do? Can I get away with 3% down? Can I get away with no money down? Don't ever do that. Why not? Because if I buy a house for $100,000, that means the asset is worth $100,000. That's a $100,000 asset. But if I give nothing, then my liability is how much? 100,000. So if I bought for 100,000, but I didn't give no money down, and I owe 100,000, how much is my equity? 100,000 minus 100,000, how much is my equity? Zero. Zero. But if you buy a house for 100,000 and you save that $5,200 from Starbucks, and you save that for a few years, and now you bought the house for 100,000, and I give $20,000 down, how much do I owe? 80,000. So 100,000 minus 80,000, how much is my equity? 20,000. So now I'm worth something.
Yeah.
See, so when you go to a bank is going to go, what's your assets? Well, sir, I just went to Cadillac and bought me a brand new Cadillac. Beautiful. How much do you give down? Oh, no, they were running a special. I gave 2% down. No money down. Okay. So really, you bought an asset because the car is an asset, But in reality, what you put on yourself was a liability. And if you don't look at the finances, you could have bought a car for 30. And if you give no money down and look at the finances, they put in all the finances. Have you ever heard on the news or on the commercials? You know, all your closing costs will be thrown into the loan. It's not going to cost you anything. So what happens? I buy a car for 30,000, but all the cost and whatever their commission and everything is thrown in there. So now that's another 5,000. But they said you don't got to pay for it. It's all thrown in there. So it's 30 is the value of the car. Plus now they added another 5, so it's 35,000. So I bought for a car that's worth 30. I paid 35,000. What's my equity now? Negative $5,000. And a lot of people don't realize this because you don't watch your finances. And if you don't watch your finances, then you got assets. But then when your liabilities are higher than your assets, then you have negative equity. And the way people look at it is like, no. You spend more than you earn, or you owe more than what you're bringing in, or you owe more than what you have. I can't do business with you. So what do? We make sure that we get assets, and we make sure we reduce those liabilities as quickly as possible so that we have something called equity. And you can do that. There's no prepayment penalty. I tell most homeowners, I said, one of the places that you could probably draw money when you need money is your house. One of the biggest assets is a house. Now you could draw from it, and we will talk about that. We will talk about business when it's maybe a good idea to draw it. We will always refer you to talk to your lawyer and your accountant before you do that. But if you want to start a business and your house is worth $500,000 and you only owe $100,000, how much equity do you have? You got $400,000. Now, most banks will say, we will give you up to 85% loan to value. So if they appraise your house and say, okay, you got 400,000, you know what? I could give you up to 85% of that 400,000 of what's left in your equity. So now you could draw money from your asset because you have something called equity. So then you're able to use that and invest it in more assets. I tell people, asset money should be for other assets. If you told me I'm borrowing from my house to buy a 6-family building, that's a good buy. If the rents are good, especially rents now are going up, right? So you go, asset, I took from this asset to buy another asset, but now when I put those two assets together, they increase my equity or keep my equity the same, but I know that in 4 or 5 years, my equity will be a lot higher than it would have been had I not purchased that asset.
Right.
But, and you're a real estate guy, so you know what I'm talking about, but when you do it upside down, nobody wants to talk to you. So what I tell you is the first thing is what's an asset? Your house, your car, your jewelry, you know, your tangible items that you have, that if you had to turn them into liquid cash, you can do that relatively fast. Even if you had to go to the pawn shop, what I have, what is it worth? Those are your assets. So you have to start looking at your assets, especially if you want to open your own business. And then you got to look at your liabilities and be honest. I tell most people in the inner city, rent to own is not a good liability. You know, things that increase your expenses and never let you come out ahead is not a good liability. A good liability is something that I know that I could pay off quickly. You know, I take a mortgage for 15 years and I pay that mortgage, you know, in 15 years. That's a good deal because that asset is probably appreciating 3% per year. So that's a good buy. Real estate is always a good buy for the most part. Any questions on assets equals liability plus owner's equity? Or assets minus liabilities equals owner's equity? We're good? I hope you're online. You guys are getting this. I hope you guys are good too. So your personal credit. Your personal credit is so important. Pay your bills on time. Be careful. You know, sometimes we go to these stores, and I did a study with a group not too long ago. And, you know, you go to the stores and what do they say? They say you get 20% off if you apply for the Macy's credit card, the this store credit card, the that store credit card. Be careful. If you don't need those credit cards, that's just gonna increase your liabilities. Your personal credit, do you pay your bills on time? Now you have the ability to put stuff on automatic payment, and that starts to help to show your creditors that you're paying good, you're establishing a good history. You know, so what does your personal credit look like? What score do you have? Because basically most lenders, what they do is they want to see your personal credit score. And they're gonna come and they're gonna ask you, what is your score right off the get-go? Information on the credit report. Select the types of info found on a credit report and those that are not. On your credit report, it's gonna have your name and address. That's gonna be on all 3 credit bureaus. It's gonna have your payment history, super important. It's gonna have credit inquiries. Now, credit inquiries don't necessarily affect you, but they will ask, especially if you're applying for a loan and there's recent inquiries, because they're afraid that you might have taken a loan with somebody else. And because the credit bureaus have not reset, you know, they want to know, why was this inquiry made? And that will usually cause delays. Your employment history, no, it doesn't have your employment history. Type of car that you drive, it doesn't matter. It does have your date of birth, and it have public record info. So it does have employment. Type of car that you drive, it does not. That doesn't matter. It has your date of birth. It has a public record recorded info. So that's very important that you understand that if there's any judgment in any court, that's going to go in your credit report. Any type of judgment, any type of public record is going to be on your credit report. And calculating a credit score, which single factor is most important? You know, some people say outstanding debt, income amount, credit inquiries, home, whether you own a home or you rent, or type of credit accounts, payment history. They want to know, how do you pay your bills? And do you pay them early? Because if you look at this here, this is the way your credit score, where you look at that number, I got a 650, I got a 700, I got an 800, I got an 850. This is the way they calculate the credit score. 30% of that score is debt. How much open debt do you have? How much do you owe on your credit cards? How much do you owe on your mortgages? How much do you owe on car payments? So this is your debt. 35% of that full credit score is your payment history. Payment history is so vital, it's so important that you pay your bills on time. You make sure that you do not fall delinquent 30, 60, 90. Length of credit history, 15%. New credit and number of inquiries is only 10%. And types of credit is only 10%. So when you look at these here, these are very minor. But the two that they're looking at is amount of debt and your payment history. Any questions on that? That is so vital that you make sure that you are paying your bills on time. Make sure that you are reducing your debt. I tell new entrepreneurs, if, let's say you purchase a car, you purchase something on credit, pay more towards the principal then. You know, one of the things my wife has done throughout our history, for example, is if we have a mortgage and it's a 15-year mortgage, then she starts throwing extra money into the principal, paying extra into the principal. So instead of a 15, we pay it off in 12, or we pay it off in 10, and we save 3 to 5 years in interest. Because right now you could borrow a $150,000 loan. You could borrow a $150,000 loan. If you pay that loan for 30 years, you will have paid back over $300 and something thousand. So I tell people, it's not, when you're buying a big asset, it's not a problem, you know, buying the asset. But then don't get used to the payment. I tell people, don't get used to the payment. What you do is attack the payment. I throw an extra 100, extra 200. You know, my wife the other day, we had taken a 5-year car payment, 5-year. But because she's always put into the practice principle, she throws it to principle. You know, we just got the title in 3 years. So she saved 2 years. It's 2 years of payments that she just saved because she paid into principal. So make sure that you're paying your debt as quickly as possible and make sure, and that's gonna help your payment history because it shows that you're paying things that you borrowed for 5 years, you paid it in 3. So that's the way you handle that. Who reviews your credit report? Well, you know that today credit is crazy today. Everything is credit. So insurance companies are gonna look at your credit now. They want to make sure that you are a good risk, Landlords are now looking at your credit score, especially, I was talking to the housing authority in Morris County, to the people there, and they were saying, now landlords are scared because of post-COVID. Now we're coming out of COVID, and a lot of landlords, have to watch now for their assets. So they're doing credit inquiries. They want to make sure that you're good. Employers are looking at credit, especially if you want to work for a company like the IRS, you want to work for a big company, they want to make sure that you're not strapped up in debt. You want to work with a bank. I was talking to a banker friend of mine, and now he says, they really look at the credit because if you're dealing with money, they want to make sure that you're not so much in debt that there's the temptation. So employers are going to look at your credit score. Of course, lenders, dating services, they don't care, and airlines don't care either. But your lenders are gonna look at your credit score. So, the credit score is vital, is important. I tell small business owners, make sure that you're watching your credit. And even if your credit is not good now, what can we do to fix it? What can we do to really move your credit up? And there's different professionals that deal with that. And even here at the chamber, we have different ones that we can refer to you, that you can talk to them, and they can help you with that stuff, lawyers and accountants and different people that specialize in that type of service. 5 credit score myths. Checking your credit report will lower your score. You only have 1 credit report, there's 3. The higher your salary, the higher your score. Not true. Paying off debt will immediately raise your score. No, it takes 60 to 90 days sometimes to see that adjustment. Credit card offers can hurt your score.
Yes.
It can't, but if you take them all, it will. Because most likely if you're taking a credit card, you're going to increase debt. And that's what lenders are looking at. For example, I was talking to a lender friend of mine, and he says, some people have so many credit cards and so much credit available to them that lenders are kind of fearful. Fearful why? Okay, you don't owe it, but if right now you have a credit line of $60,000, $70,000, $80,000, which is good because it's by virtue of your great credit, but you're applying for a loan from them, but you have all this credit available, the fear is that one day you will run this credit up and somebody will get hurt. So it's always a risk. So the credit score basically is telling the lender, take a risk. She's a good risk. He's a good risk. Take a risk on that. Versus, I'm not going to take a risk because it doesn't look good for other people that have loaned them money. We're not going to take that risk. Or if they take that risk, your interest rate is going to go up. You're going to pay at a higher rate for the money that you borrow. Any questions on this?
So you said that I don't understand, you're saying paying off debt will immediately raise your score. How is that not true? You said 60 days to 90 days, they have to see consistent improvement.
What happens is it depends when the credit card, the credit companies adjust. Some of them say that in 30 days, it will adjust. By next month, it will adjust. Myself, I pay stuff off. Sometimes I've seen 30, sometimes I've not seen to the following month because they usually adjust, like creditors report once a month. And then it's up to the credit companies to adjust. But if they don't adjust right away, you might end up seeing it not, let's say you pay something off in May, they didn't adjust it right away, so you didn't see the improvement in June, you might see it in July, because most of them will touch it only once a month. So though somebody can call the lender, and the lender can say, yeah, he paid it off, but the credit reporting agency itself could take 30, 60, depending on when they catch it to bring the score up.
And when people are checking your credit and they tell you they want to run your credit, if you know your credit has been run recently, shouldn't you ask them to do a soft one?
They
Because
do a soft check, and most
Sometimes-
companies will do a soft check that does not affect you. But even if they do 2 checks in 1 month, it's not gonna bring your score down right away either,
Even if they're hard checks?
even if they're hard checks. See, people think I had a hard check on Monday, my credit score by Friday is gonna be super low because I had 3 hard checks. That's a myth also,
Oh,
because they don't adjust that quickly. So you might see a slight change, maybe 30 days, 60 days, whenever they get to it, but you're not gonna see it in 1 week. So a lot of people are like, this month alone, I had 3 inquiries and my score is gonna go from 700 to 650. That it doesn't happen that quick.
Okay.
Can I change my credit score? You yourself, you can. You know, and you have a lot of companies that make a lot of promises that they can send inquiries in and things are gonna get removed. Just be careful with those kind of companies. I've had people that have had to go to their lawyers. I tell people, talk to a professional, like a lawyer, an accountant, somebody that really deals with this. When you have all these companies out there, we can raise your credit score. Nobody can really raise your credit score.
Right.
You know, and there might be some false information that can be removed and stuff like that. But most of these people that say that in 30 days, they can bring your score to 700, again, in 30 days, the credit card, the credit agency is probably not even looking at your report in 30 days. So they could submit the letters and they could submit all this stuff, but it's gonna take a while. So I've seen a lot of people lose money in that. So I tell people, be careful with that. Nobody can really change your credit score. Make sure you talk to a professional like a lawyer. If you need a free credit report, you can go here. This doesn't really affect your credit. You could go to www.annualcreditreport.com. You can go there, you can get a free credit report. It'll help you to see your score. www.annualcreditreport.com. It's a free service. You're able to look and see pretty much where your score is standing, and it's not going to affect you. So I think it's important because you're able to see and you're able to make sure. You know, one of the things I discovered in my credit, I do have credit check on mine. I do review my credit report often, and I've even seen things that I've paid off that 30, 60, 90 days have not been removed from my credit report, and I've had to call the creditor and say I paid it off, but it was never reported. So mistakes do happen, but instead of hiring somebody else, you should take a look at your own credit report, go line by line and see, you know, are these open accounts, not open accounts? This is an old account. You can call the creditor and they'll usually be glad to just update your credit report, send it in that you did pay that off. So this is important. I would tell you, look at your credit report because your credit is going to play a major role in whatever you do. These are the 3 C's of lending. 3 C's of lending. Number 1, capacity. What is your ability? What is your ability to pay back? Number 2, credit. So the reason I spend some time on credit is because if you want to open your own business, you want to succeed, your credit is going to become vital. Your credit is going to become central to you really, can I afford it and not get into trouble? And the third one is collateral. And all collateral is assets minus liabilities. What's your equity? What's your equity? So the bank is always going to ask you, what's your collateral? You hear business people usually say, you got to put grease in the game. You got to put your hands in the game. No lender really wants to give money when you're not willing to put your own money and what you believe in. You know, some people want to go for a business loan. Okay, I need to succeed. I need 30,000. Out of the 30,000, how much of your own money are you putting in? That's why I tell you that your best bet if you're going to start your own business is start saving. Show something that you're putting some skin in the game, that you're really putting your money because you believe in your vision. So that's going to be super vital. And now step 2, the idea. The idea is important. What problem are you solving? You got to think about that. What is it that you're going to accomplish? What is it that you see? What's the vision? What's my end result? What do I see as, you know what, 5 years from now, we're gonna be here. And I tell people, make your dreams realistic. You know, this is not a movie. This is not where you see this big picture or, you know, like some people just say, you know, you just can, you know, the secret and all this other stuff and nature, they're gonna bring it in and the universe is gonna supply it and it's gonna drive it in and you gotta work. The fact that I know is if you wanna succeed, it's gonna cost you work. And the idea is something that you just don't throw out. The idea is something that you should spend time analyzing and not be afraid to do the pros and the cons. You know, I want to do this. What are the pros of this business? What are the cons? You know, what are the things that I can say, man, this is really going to help me? And what are the costs? Because in everything, there's a give and take. That's in everything. You know, so that's why I told you in your personal finances, you got to start right away, what? Analyzing your personal budget. I'm going to open my own business. I could be my own boss, but that might mean that I got to give up my job. So I got to give up $50,000 that I make for my employer right now. So, okay, I give up the $50,000. What do I have to do for this idea to create $50,000? That's just to make me whole.
Yes.
I gave up 50, make 50, but it's going to cost me more than 50. Because it's going to cost me an administrator, it's going to cost me an accountant, it's going to cost me support, it's going to cost me supplies, it's going to cost me. So this business not only has to cover the 50, but has to cover, let's say, another 50. So then, does this idea produce 100,000 to start with? Can it produce 100,000? And if it can produce 100,000, what's the idea? How do I make it happen? How do I make this idea marketable, where people will want to buy from me? Why would you want to buy from me? And you got to be able to sell yourself. So you got to know, okay, you would want to buy from me because, and only you can answer that. You would want to do business with me because, you know, I tell people, you know, we do business connections here in the chamber, and I tell people in business connections, okay, do your elevator pitch. You got 30 seconds, go. And so I can't explain in 30 seconds what I do. Well, you got to be able to explain it because if you're, and the reason they call it an elevator pitch, usually you have between one floor to a second floor to present yourself. You know, so you got to be able to say, hi, my name is Ed Ramirez. I am Dr. Ramirez. I have a doctorate in business administration. This is what I do. I do some accounting. I do consulting. I help businesses succeed. One of the things that I do is help businesses start from A to Z. I help you to run your business. I help you to manage your business. I help you to scale your business. I make sure that you are going to succeed. And I want to make sure you're the next success story because of my background of 30 plus years of accounting and servicing people. I believe that I can help your business.
That's good.
All right. So you got to know how to sell yourself in 30 seconds, 45 seconds. All right. So start working on your elevator pitch, because if you want to open your own business, why would I want to do business with you? What's your idea that's going to make me say, man, I'm coming to you instead of going to somebody else? And I know some of you, this is not the time that you say, I'm shy. I don't talk. Oh my God, I don't like to talk to people. No. If you're going to be an entrepreneur, unless you're doing something on social media or something, you know, you're behind a computer, that's something else. But you got to sell yourself. So you got to be able to sell yourself. The idea, where did it come from? And these are questions that you should write down. Where did it come from? Is there a market for it? What will it cost to start? And that's the biggest thing. What will it cost to start? If it's, you know, a product that you're developing, well, how much is it going to cost, you know, to mass produce this thing? You know, I'm sure you guys have watched Shark Tank once or twice. And if you haven't, and you're going to open your own business, Shark Tank is a good show to watch because they pose a lot of these questions. Will it satisfy my goals? Is it worth the investment? Remember this, that before you convince me to do business with you, you got to convince yourself. And you got to know that you're good, and you got to know that you know what you know, and you got to know that you're effective. And when you're running your own business, that's not a time to be shy, and that's definitely not a time to be quiet. But it's a time to go. You know, my boss and I have something here, and you know, everything we do from here to tourism to everything we work with is attack, attack, attack. You know, you know, and it's a thing that's become, okay, we got to attack, we got to do what we got to do. And we make it happen. We analyze it, we sit down, we analyze it, we plan. Usually on Mondays, we're sitting down, we're planning, and then we're executing all week. It's the only way you're going to succeed. Any questions on this? The idea where will your business really give you what you want? Only you can answer that. Will your business give you what you want? Some people say, well, I want to go into business because I want freedom. Well, then you know that freedom that's not planned can become bondage.
You said freedom, that's not what?
Some people say, I want to go to work because I want freedom. But freedom that's not planned can become bondage. How? I left my $60,000 job in order to gain freedom and become my own boss, but because I didn't plan it, this business only produces 20,000. I'm short 40,000, so I'm now 40,000 in the hole. So what I tell people is there's got to be, that's what I tell you, your budget, don't skim. Make sure you do a good budget. What does it take to support yourself? Even now, you got to know, if you sit down and if you haven't done a budget, that's probably why you don't have a big savings. Because when you do a budget, when my wife started doing a budget, and mind you, I've been working in accounting and business for over 30 years. But my wife, you know, started doing a budget. And there's something about a budget. You know, as long as there's no budget, you're eating out, you're spending, you're going on vacation, you see something at Amazon, you just order Amazon coming in every day, and life is good. But now when somebody tells you, do you know that you just spent on eating out $3,000? What? You know what I could have done with $3,000? Then give it to Starbucks? There's a lot of things I could have done with $3,000. You know, or, you know, in the clothing store, you know, you spent $10,000 last year. You know what I could do with $10,000? But we don't think in those terms because we don't have a budget. So what I tell people is make a budget, man, and make it realistic. And then start keeping track of your expenses. And you'll realize you'll find places to cut, and you'll get super motivated about saving. Because the more you save, the greater your asset, the lower your liability, the greater your equity. And remember, what you want to do at the end is I got plenty of equity to do whatever I want. And hopefully in the future, this business will provide enough equity for me to retire. Any questions on that? You good? Next week's assignment. You're going to prepare a household budget. I'm going to send you the forms so you don't have to look them up. I don't want to see your personal stuff. This is for you. It's your homework, but I'm going to review it in class, but it's for you. I don't want to see your personal finances, but I'm going to help you develop a budget. I want to help you prepare your personal financial statement. And basically your personal financial statement is assets minus liabilities equals owner's equity. And then I'm going to ask you, what is your profit? What is your loss? What is your net? And that's the way you calculate a business. Because a lot of people, when I talk to people, they usually come and tell me, well, Ed, you know, I see myself making 100,000. That's great. But how much is it going to cost you? There's something, if you're going to run a business, if it's a product business or a service business, it's something called cost of goods sold. Cost of goods sold. For example, I'm a contractor. I'm going to do your deck. I'm going to do an addition on your house. I'm going to charge you $100,000. That sounds good. But based on what material is going to cost me $40,000. So what is my cost of goods sold? $40,000. So I got to take $100,000 and right off the get-go deduct $40,000 because that goes to Home Depot for lumber, sheetrock, and everything else. So that is my cost of goods sold. So all I have to play with is $60,000 to pay administrative, taxes, my salary, employees, and everything else. Is it enough? That's why I want you to think about your revenue minus your expenses. What's your net? Now let's say that I do that example. I do 100,000 minus cost of goods sold, which is 40,000, I got 60,000. But now from that 60,000, I turn around and say, well, between administration, salaries and stuff, it's gonna cost me 30,000. So now I'm left with 30,000, but from that 30,000, I gotta give Uncle Sam 0.153% for my self-employment tax, and then I gotta give him a little bit for federal tax, and then I gotta give him a little bit for state tax. Okay, so it's gonna be 35% is gonna go from there. So then my net after taxes is whatever is left after that. And that's really what I made on this job. So it's important because sometimes I get owners, for example, I was helping a designer company, and they asked me as a consultant to come on board, and he was booming, he was doing business, and he was selling all kind of stuff. And he's like, I can't make it. I'm not making it. I said, well, how do you value your products? He says, well, I will buy from China, Japan, Taiwan, wherever. I buy, let's use an example, I buy a hat. And that hat, I buy it for $3. So I just double it up and sell it for $6. Well, wait a minute, where did you get to sell it for $6? Well, I just doubled it. I said, but did you calculate rent and insurance and utilities and salaries and employees? And did you, I said, you bought it for $3, but you probably have to sell it for 20, 25, or 30 to cover all your costs, associated costs. So when you run your own business, it's not just, I bought it for $3, I sell it for $6, and man, I'm making $3. No, you bought it for $3, but you got to pay shipping, and you got to pay insurance, and you got to pay utilities, and you got to pay your salary, and you got to pay the administrator, and you got to pay salaries, and you got to pay this, and then you got to ship it again. So now you got to pay shipping again. So maybe I got to sell this $3 product that I buy for 30 just to break even. So one of the things that I'm going to do is help you calculate your break-even points. You know, if you cook something, you know, some people say, well, you know what, I buy donuts, I sell donuts. Well, how much does a donut cost? Well, I think it costs me about 30 cents. What do you sell? I'm selling it for $1. I think I'm making money, it's decent. Not even Dunkin' Donuts sells donut for $1 anymore. Why? Because it's gonna cost you 30 cents, and then you gotta pay for the operator, the cook, the ovens, the utilities, the rent. No, I pay 30 cents for that donut, but if you want my Dunkin' Donuts, you gotta pay me $3 for a donut because I'm not making any money. So those are things that you gotta think about when you're doing your own business. Just don't be quick to say, I double it and I'm making money, because it's not always the case. So prepare your financial statement. Obtain a copy of your credit report. You know, get that for your own good. I'm not gonna ask here, and I'm not gonna ask online, let me see your credit score. That's not what I'm gonna do. I basically just wanna make sure you're okay, you're healthy, your finances are healthy, and you're able, and if it's not good, it's okay. There's always a starting point. I tell people, don't get discouraged. Some people say, man, I just checked and I got a 550. Okay, we can't go any lower. Okay, so let's start going up. What do we do now? Let's start working our way up. There's always an opportunity. I want you to get motivated. I want you to say, I will, I must, I will, I must, I will, I must, you know, instead of I should. I should have, I could have, I might have, I never do it. You got to go, I will and I must. I will and I must, and I'm going to succeed. I got some reading stuff here. I'm going to send you the material that you got to read. You don't have to worry about that. You don't have to get the book. I have everything right here. It's all going to go by way of email. You're going to get my email. For those that are in the room, make sure that I have your email address. And if you check your name, I probably do. If you're here, I probably do already. I'm going to send you everything tomorrow. So it gives you a whole week. The weekend, while everybody out is having a party, you're going to be home doing homework and planning for next Tuesday when you're back with me to make sure that you're ready and that you're ready to succeed. Now I want to open, I know we finished early today. I ran through this pretty quick. I didn't do the 2 breaks in between because I figured, you know, the group wasn't that big, but I want to open out to Q&A. Are there any questions here in the room that I can help you with? And for those of you that are online, you can start putting them in the chat and make sure that I will make sure that I respond to you by tomorrow or the next day, the latest.
I'll watch it if they come in. I'll let you know.
Okay, great. So any questions, Q&A? How can I help you? Nobody here, everybody good?
And your report is, it's free for 1 year, correct?
Yeah,
One report, free every year.
Yeah. yeah. So go and get your report, order your report, just get it, review it. And I tell people, take your time. Just don't look at the score. Some people just go straight to the score. Oh, it says 750, I'm good. Look through it. Make sure that that is an accurate representation of you. You know, and if something is wrong, definitely write to the accrediting agency and they will remove it. You don't need a special, you could write to them and say this inquiry is incorrect. Or if someone has not reported something, you could call the creditor yourself and get the creditor to make an adjustment.
You can go right to this website and obtain the credit.
Yeah. Yeah. Go to the website, make sure that you get it, order it, so it will help you. You know, I tell people, know your credit score.
So let's say for the revenue minus expenses is your net. How would you evaluate things if you see that the expenses aspect, like you're in the negative? Like remember you were saying before the negative, got the word that you.
If you have negative equity.
Yeah.
Negative equity, but it depends. If you're doing your profit, your revenue, and once you do all your expenses, you see that there's a negative, there's only two things you could do with revenue. Number one, increase revenue by charging more or increasing volume. That's the only way we increase revenue.
I don't understand.
Meaning more clients. Let's say this is the revenue I make with 100 clients. I really don't want to raise my price, but then 100 clients is not cutting it. Then I need 150 clients in order to stay at the same price. Or if I know I'm only going to keep 100 clients, then I got to increase the price in order to diminish that expense, that negative number on the bottom. So it's usually one or two things. And I usually with small business owners, they go, I don't want to increase the price. It's just post-COVID. Then the only other alternative is increase volume. So I got to bring more customers in order to make more revenue. But then I also have to evaluate, I bring more customers in, what is the cost associated with that? And sometimes we realize that even if I bring more customers in, my only solution is increasing the price. You know, so again, those are things that you got to evaluate personally, saying, okay, if I increase by 30 new people, 30 new clients, what would be okay? But those 30 new clients are also going to incur some expenses. So you got to look at the income and the expense all the time to make sure that that net stays in the black. Especially after operations, administration, cost of goods sold, and taxes. Because remember, after you do income minus expenses, whatever is left over, that's when Uncle Sam knocks on the door and says, okay, now I want my percentage of that. And it depends on what tax bracket you are, but I tell people 30 to 35% will go between self-employment tax, state tax, federal tax. So you might be looking at 30, 35%, easy.
Do you know any softwares that help track all of that? Like I've tried Excel, but I don't know if there's any.
A good software for small businesses that a lot of people use is Quickbooks. So what I tell people is, give them a look and see if it's something that will work for you. But Quickbooks has helped a lot of small businesses because it's like running a checkbook and it keeps track of income, expenses, and you're able to group your expenses so that you're able to see like cost of goods sold. Let's say in the case you're running a beauty salon, so you're going to have machines, you're going to have shampoos, you're going to have conditioners. You could almost break it down into those categories and then be able to see, man, in shampoo we're spending $3,000 and yet in conditioner only $2,000. Why? It helps you to question and to see if you're getting a good deal or not. Spreadsheets is very difficult. I tell a small business to run from spreadsheets is very, very difficult because you're not able to break it down. QuickBooks allows you to do a lot of different maneuvering, and it also allows you to connect it to your accountant, which then it helps your accountant when he has to do your end of year taxes.
You also could do invoices with QuickBooks too as well.
Right.
So let's say whatever products and services you have a line item, you can create a line item or whatever it is, and you can create an invoice, you could put your logo. It's very, I used to have it when I had my business, and it was pretty good, but now, this is maybe, I don't know, I think like over 7 years ago, they used to be able to buy the actual program outright. I think now it's like a monthly service.
A yearly, is
A yearly
you can do it,
service.
if you buy the desktop, is a yearly service now. If not online, but there's other software out there.
What
That
was the name that you went, that you?
It's QuickBooks.
Oh, okay.
QuickBooks, yeah.
QuickBooks is like the most famous one that most businesses are using, but there's also other ones that I would tell you, consider it as a small business. There might be other ones out there. But it's definitely good to have an accounting software, because even, for example, for those of you that are in Morris County, we're doing the Morris County grant program where we're giving small businesses up to $15,000 that were affected because of COVID. And what we do is, one of the things that they're asking is, if, let's say you were a non-profit 501c3 or something like that, and you don't really file an income tax, they're saying, then give me a financial statement. And most small business owners, because they keep it kind of a shoebox and they keep their personal mixed with their business, I would tell you right now, if you're gonna run your own business, have a separate checking account, separate savings account, totally separate from your personal finances. Never put the business and your personal in the same checkbook. I tell people, run a separate checkbook where if the IRS ever came, if anybody ever asks, you can say, these are the books just for the business. My personal expenses are not mixed here, because that's where people get in trouble. So go to the bank, open your own separate account for your business and run that separate from your personal. And some people say, well, how do I get paid? Write a check from the business, and you could call it payroll, whatever, to yourself, and then pay the taxes at the end of the year. So let's say I run my business and I take a draw from my business checking account, and at the end of the year, that draw is 30,000. Then that 30,000 is going to count as revenue at the bottom, because your personal salary, you cannot deduct it when you're in LLC or a sole proprietor business. Some people mistakenly do that, and you can talk that with your accountant. But let's say you're running an LLC and you pay yourself 30,000, and you think of the 100,000, I deduct the 30,000 that I paid myself. You cannot deduct your own payroll, because on a Schedule C, you're going to pay for that total income minus expenses, not including your personal salary. You're going to pay taxes on that anyway. And an accountant will help you with that. But that's stuff that I try to help people, because they think, well, I went to ADP and ADP told me that I could deduct, that I could get a W-2. They'll give you a W-2 to help you. But on a single LLC, you cannot deduct your personal salary from the expenses of the business. Any questions? Any more questions?
I have a question. Let's say if you run a business out of home and you're basically, your office is at home, and let's say you're an LLC, do you, like, for instance, like the mortgage or the rent of the house where you reside, your business or your office, would you put that as a business expense or as a personal expense?
Well, this is what happens. The IRS allows, and you can check it out. This is what the rule says. The rule says, if you have a place in your house designated 100% for business, meaning you never use it for personal use, but you use it 100% for business, that whatever you use can be deducted. But they can always come and audit and check that to make sure that that is used 100% for business and never used personal. So that's something that you would discuss with your accountant, and he will give you the complete rule on that. The IRS says you can deduct it, but in most cases I've seen that when you start going through the criteria line for line, it's sometimes best not to deduct the space, especially when it's in your own house. Because it can come back, especially, if you've used it for personal, or use it for personal sometimes during the week or whatever. So it's a touchy thing, but that's something you talk with your CPA and make sure that they read the rule clearly so that you're.
So if you can deduct the personal salary, how exactly do you go about that?
So what happens is with a Schedule C, and you're gonna hear this as we move on further, you get a Schedule C. When you're a single LLC, or a sole proprietor, you're gonna do at the end of the year with your personal taxes what's called a Schedule C. What the Schedule C does is allows total revenue, cost of goods sold, and then it allows everything that's for operation for the business, everything that's operation, marketing, accounting, lawyers, all type of expenses, supplies, all those expenses. So let's say I did 100,000. Let me use the number 100,000. And from the 100,000, I have an expenses, not my personal salary, expenses of 50,000, excluding my personal salary. That leaves a net of 50,000. My salary of 30,000 doesn't matter because I'm gonna pay taxes on the 50,000. So once I pay the taxes on the 50,000, let's say I wanted to take the full 50,000 just for me personally. The government doesn't care because I already pay taxes on it. So you cannot do like some mistakes done with a sole proprietor or an LLC where they figure the 100,000, 50,000, that's 50,000, but I took $30,000 salary, I'm only gonna pay taxes on 20,000. That's when the government said, no. You're gonna pay on 20,000 plus your $30,000 salary, you gotta pay on the 50, not on the 20. When you're a sole proprietor or single LLC.
Okay, so because I am a small business owner and I work for myself, I'm the only person that works for my business. So that I don't have to run into any type of things with the taxes, I did something called Paychecks. Have you ever heard of them?
Paychecks is just a provider
Okay,
and they're gonna give you a W-2, but whatever that salary is, when you talk to your accountant, whatever you took for yourself, let's say 30, 40,000, whatever it is, whatever that for salary was, will be added back on the Schedule C, not deducted. So let's say that once you took your 35 or whatever, let's say 30,000 salary, let's say I took 30,000 and it shows that I was zero. Income minus expenses, we were zero. No income, no expenses, you will have to pay the taxes on the 30,000, though it was your salary. According to the government, that was net profit. That's how come you were able to draw a salary.
okay,
So then you pay the taxes at the end.
okay.
So it's important to pay attention to the net, is what you're saying.
Yeah, because when you're a single, a lot of people make mistakes, and when you're a single LLC, you go to ADP, Paychecks, these different payroll companies to get a W-2. And they tell you, oh, you're just gonna get a W-2, and then if you don't tell your accountant, most accountants know if you're a single LLC or you're a sole proprietor, they know you got a W-2 because it's just easier for mortgages and this and that, they understand that. But then they understand how to do the accounting for you so that you don't ever get in trouble.
So is it better just to do a 1099?
For yourself, you don't even have to do a 1099. You do that for other people
Okay,
that are working for yourself. Whatever that net is, you're gonna pay taxes on because it's on a Schedule C.
Don't you have to make a certain amount? You can make a certain amount without having to report it?
No, if you're a 1099 self-employed, at the moment that you hit that $600 mark, you gotta report it.
600, if you make 600?
If you do at least 600 as a 1099, it's gotta be reported on a 1099.
Oh.
Once you get to that $600 mark, you get a 1099.
Oh, yeah.
All right, so you gotta make it. So talk to a CPA. What I tell you is anything that deals with actual numbers. See over here, I'm just talking theoretically,
Right.
but anything that deals, you gotta talk to your actual accountant, sit down with him, do calculation and let him tell you what is what, especially what you owe the government and stuff.
Right.
That's why I tell you, always hire a professional. For formation, a lawyer. He knows all the laws of the state. He's gonna help you make sure your formation is in alignment. Though there's other, you could do it yourself. You could go to the New Jersey website, you could do it yourself. There's different organizations that will help you, SCORE will help you, and other organizations will help you. But I tell people it's always good to get the advice of a lawyer because the lawyer knows the law. For all accounting, get the advice of CPA because he's gonna tell you all the accounting and he's gonna help you stay on the straight and narrow and not get into trouble. Then us consultants will refer you to the lawyer and to the CPA when we see that things are screwed up. You know, sometimes I come in, I'm like, you need a lawyer. Let me get your lawyer, let me get your CPA in order to get your stuff in order.
You gotta repent.
It's all good, but we all learn every day. That's why you're here learning and getting some knowledge. Any other questions? Are we good? Anybody online? Nobody else has said anything?
I'm answering their question.
Oh, your answer. Oh, good. See, I got Matt here. Thank God. I got professional here helping me out. Well, you know what? Next Tuesday, just to show you a little bit, you know, we're going to go into part number 2, and we're going to go into the full program. We're going to discuss homework. So that's why I need your homework. And then we're going to start identifying the target market, assess management, and we're going to prepare startup costs. So now we're really going to get into the nitty gritty. But one thing that I need is your personal has to be in order. You know, and I tell you, that's why the personal is an analysis internally. You know, when I went to business on my own, and I've been doing my own business for many, many years, has always been sitting down with my wife, sitting down with the budget, sitting down with the family, and making sure that my decision was not going to affect somebody else.
Come on.
You know, so it's always like, okay, so I've always worked different jobs, you know, to bring different revenue streams so that I could keep my business viable and running. And once that started taking off, then I started doing other stuff. And I still do consulting work and do stuff like that, besides what I do with the chamber and everybody else. But I make sure that I keep myself always, keep a few streams of revenue. You know, something that COVID has taught us, if anything, is that you can't depend just on one fountain. So you got to think about yourself. And this is one of the analysis that I do in personal analysis when I sit down with people. I say, okay, let's say you work for someone, you make $100,000 a year. Let's say that employer fired you tomorrow. What does your life look like? And some people have never thought of it that way. I say, man, I really have all my eggs in one basket. If I really lost my job tomorrow, what can I do to survive? You know, some people say, well, I got some savings. I'll be able to survive a few weeks. I will start looking for another job. You know, so again, you gotta think of those scenarios, because post-COVID, a lot of things have changed. So you gotta think, you know, even as a small business owner, I tell people, when you're planning, do the what if scenario. I do, what if it goes bad? What if something falls? What if something doesn't work? What if? And always have a contingent plan. And sometimes it's not going to be 100% clear, but at least have something that if you have to fall back on something, you can say like, okay, at least I have some sort of plan. Because as an entrepreneur, one thing that you will learn, you need to navigate through life, and you have to minimize surprises. Even when you're giving an open credit line to someone, and you say, I'm going to give someone an open account, can you afford that risk? You know, how much can you afford to give somebody an open credit before it affects you? If that failed tomorrow, what would that do to your business? So when I tell you to plan personal, you don't really plan for the good. And sometimes, you know, when you're starting a business, you just look at the good. But I tell people, look at all aspects of it, the pros, the cons, and try to plan as much as possible. Sometimes we're not going to get it all, but you start to plan as much as possible to make sure that you're in the best position possible at all times. At all times, you got to be in the best position possible, no matter the situation you're facing. That's all. Also goes for our people online. You know, always plan. Failure to plan is planning to fail. So I always plan, and then I plan some more, and then I have all. Sometimes you walk in my office. Sometimes even in my office here, you walk in, and I have all these different strategic plans and analyzing things and what if scenarios, just so that I'm always one step ahead. I prefer to be proactive than to be reactive. So it's always good to ask, what if this happens? Will I still, you know, and then go and succeed, man. Go and kick tail and become the next success story. And once you know the why, here at the SBDC, we're going to help you with the how. But the why, I can't answer that for you. So when I'm talking about idea, I'm talking about budget, I'm talking about assessment. I'm talking about management. I'm going to talk about the different assessment steps in the business. I'm going to talk about the market. I'm going to talk about the organization. I'm going to talk about that I can help you with. But the why, only you know the why. Why are you going into business? I can't answer that. You got to answer that. Well, what's going to put fire in your belly? That's going to make you the next success story. And are you willing to put the time? It's not going to be 40 hours. I forgot the last time I worked 40 hours. I don't remember, you know, when the last time I worked 40 hours, but success is going to cost. But it's worth the price. Because there's nothing like being your own boss and being able to make your own decisions and being able to control your own finances. Instead of your finances being in somebody else's hands, why not in your hands to plan your future? Any more questions? This was good. This was good.
Very good.
So expect an email from me. Everybody that's online, I got everybody here. Expect an email from me. I'm going to send you some material, do some homework. Hit me up. Go to Ramirez at morriscountydc.org. Send me your email. Send me your questions. Whatever I can do to help you. I want you to succeed, but I want you to do your homework. Make sure the next Tuesday you're connected with me, and we're going to have a great time here. We're going to learn together. I'm going to ask you guys some more stories. For those of you that are within driving distance, come into the office. You can come here and interact with us. For those of you that can, we'll do it online again. But make sure next Tuesday, 6 to 8. We're good? But that's all I have for today. Thank you for joining us. Thank you for being a part of this. Thank you for coming in person. And I'll see you next week at 6 o'clock. Thank you
We
so
will
much.
be on time.
All right.